Dalal Street. The 25 basis rate cut by the Reserve Bank failed to enthuse the markets. Both the benchmark indices took a severe beating and closed 2% in the red. Today turned out to be the biggest one-day fall in the last 2 months. Let's talk about the Sensex first. That took more than a 500-point hit and it closed below its 100 moving day average. So it went home at 24,883. The Nifty, that has closed 156 points in the red and is just about managed to hold its head above 7,600. Just 3 points above 7,600. The Bank Nifty led the downward slide with a 3% hit. The mid-caps bet slightly better, but still 200 points lower. Anuj Singhal standing by to decode the market action for us. Anuj, would you say that what you've seen in Dalal Street today is only because of the disappointment that may have come in from the monetary policy? Because to be fair, we've also seen European markets come under pressure.
Yes, so let me put things in context. Yes, the policy had its role in terms of the market decline, but the policy's role was that it turned out to be more of sell on news more than anything else. Otherwise, today was because of global cues. When we were trading, the German market was down 3% and the Dow futures were down about 150 points. So let's just keep that at the back of our mind before saying that, this was entirely because of policy. The policy impact was that the market had baked in a 25 basis point rate cut. Now, the jury is out on whether if we had a 50 basis point rate cut, would the market have actually reacted differently? Or I dare say maybe it would have fallen more because, more good news would have been out of the way. So, it's way of looking at things. Today was a bad day. The market needed some excuse and the policy turned out to be that excuse. It would have fallen regardless of policy given the way global cues turned out. The Bank Nifty, of course, led the way with 500-point decline. So, here you can say that, yes, this fall was more on account of policy because the market didn't get the kind of rate cut it wanted. Cash market volume surged today. That was the other disappointing bit as far as bulls are concerned. And if you see the kind of build-up that you saw in the futures and options market, there also quite a bit of aggressive selling, not just in Nifty and the Bank Nifty, but also in individual stocks. In terms of big losers, of course, banks led the way. ICICI Bank was the top index loser in terms of contribution to the index. SBI and Yes Bank were also lower. Tata Motors, Maruti, Larsen & Toubro, Infosys, Bharti, Coal India, these were some of the other big losers in today's trade. And outside the index, some of the stocks that stand out include Divan Housing, Indiabulls Real Estate and Exide Industries. So all in all, a bad day. But keep in mind, the Nifty has fallen 150 or 200 points after a 1,000-point rally. So as of now, this remains profit booking, but keep an eye on the global screen.
Thanks, Anuj, for joining us and taking us through that analysis.